Good morning from Sydney to the New York close. What a day. Yes, markets were down, but they were already down in the futures in Asia. And so really the US market was bouncing, but bouncing relatively to the sharp declines seen. What I noticed was the US press, the Wall Street Journal, trying to blame Tokyo for the sell-off when it had all started in the US the previous week. So what we're going to see now for the next few days is a little bit of congestion, but it is a bear market. And so I just think you need to consider that. I'm going to get back to more normal reports after the rather yelling from the rooftops that it is going to be a major crash of the last few days and being right. We're going to calm down a little bit, start looking at the economic data and you'll notice that in the US press overnight, they were very enthusiastic about the services PMI. That came in at 51.4. Remember, the previous month was 48.8 from memory, and that was a contraction. So really over the last 2 months, services PMI is flat, no growth, but at least it is a positive number. But I wouldn't get too excited because a normal number for the ISM services PMI is around 55, and we have come down from the 60 to 65 range. So the services sector of the US economy, which is most of the US economy, is certainly in the doldrums still. The Fed will be cutting rates, of course, and there'll be a lot of hype now in the Wall Street groupthink spin doctors' desks and drawers about how that means it's time to buy the market again. Now, I think if you have some stocks that you really personally like, some individual stocks, and you think they are or would get through a recession okay, then maybe have a nibble here. I wouldn't jump in though, because what I think is we're going to see some further consolidation now through this week, because that was a big wide range for the futures in particular yesterday. But the big three funds are a little bit torn now, because there'll be some parts of their companies will be wanting to buy the dip, others will be wanting to get out. But overall, those big three super funds, BlackRock, Vanguard, etc., they're going to want to support the market, because even if they want to be sellers, they actually need the market to calm down so they have the liquidity to sell. But let's think a couple of sideways days, but the overall risk being lower for US equities. The Australian market, I think, could surprisingly stay under more pressure than the US market, though it could be a buy day today. But I'm seeing, it's not going to be down every day, but I'm seeing these rallies as bounces in a bear market at the moment. The only thing that would change my mind is if by Friday the market is still stable and you have a strong Friday New York close. That could mean that I'm wrong and the market will survive after all. For the moment though, I continue to suggest caution. Hope it helps. Have a great day.